In this clip, we're going to talk about 5 additional factors to look at a company like Apple. They are share price stability, liquidity, size, stock beta, and finally accounting strength. Share price stability is quite important to look into because quite often you thought you are buying a very stable company, but when you look at the actual trading history of the company's share price, it's actually quite volatile. So that is the purpose of using the stability rank here to help you understand if a company's share price is volatile, and if it's not something you can tolerate, the stability rank will raise that for you. So as you can see here, the overall stability for Apple's share price history is very stable, and we measure stability here as the standard deviation of the share price. The higher the standard deviation and the more volatile the share price is, the worse the rank is going to be. And here Apple's overall stability rank is at 1177, which is very stable. And specifically we have 3 different time frames to measure the stability over the last 30 days, 90 days, and 200 days. And you can see across 3 different time frames, Apple's share price stability is all very stable. And moving on to liquidity, it's also another measure to help you gauge the share price history. And the general rule of thumb here is the more liquid a company is, the more it is to your favor. Because when you want to get in and get out, a more liquid company is easier for you to achieve that. And typically large companies will be more liquid than smaller companies. And here we measure liquidity as the average daily value traded for a company's shares. So for Apple, its liquidity rank is at number 3. That tells you Apple's shares is the 3rd most liquid company in the world. And specifically for the last 30 days, its average daily value traded is at $2.9 billion, and it's pretty much the same at $2.8 billion over the last 52 weeks. Size measures the market capitalization of a company. Apple's market capitalization here is at $2.4 trillion, ranking it as number 1 in the world. And the final factor about the share price is stock beta. The more correlated the stock trades with the overall market, the closer it is to beta 1. And by definition, the market itself has a beta of 1. And that's quite important when you want to gauge how correlated the company is to the overall market. And based on your view to the markets itself, you can choose to buy low beta stocks or high beta stocks. And generally speaking, high beta stocks give you better exposure to that market, and low beta stocks give you less exposure, because the low beta stocks will be less correlated to the underlying market. And here, as you can see, Apple stock beta is at 1.2 times. What this means is just basically, if the market goes up by 10%, Apple's share price would have gone up by 12%. And the opposite is also true. If the market goes down by 10%, Apple's share price based on the stock beta of 1.2 times of it will have gone down by 12%. And finally, we look at the accounting strength. The accounting strength is all about the quality of a company's accounting practices. And we look at the discrepancies across 3 different financial statements: income statement, balance sheet, and cash flow. And the more discrepancies you can find, the lower the quality of the accounting, and hence the worse the rank is going to be. So here Apple has a very sound accounting strength, ranking of 523. And specifically, there are 3 different contributions to this final accounting strength rank, from cash flow conversion to working capital condition, and finally interest coverage. And you can see here the cash flow conversion for Apple is sound, with the amount of free cash flow relative to net income at 27.8%, and working capital days at 51 days, which puts Apple into the very sound category for working capital condition. And finally, the interest coverage, measured by the amount of profits Apple generates relative to the interest it pays, and that ratio is currently at 22.1 times. Once again, putting the interest coverage rank into the very sound bucket. And why it matters to look at the accounting strength for a company? Well, the simple reality is companies sometimes may lie about their accounting practices. And that is the job of the accounting strength rank here. It's to detect the discrepancies and the irregularities, because the last thing you want to do is you buy into a company you fall in love with, but then end up stumbling upon an accounting fraud because the company lied about its financials. So overall, these are the complete list of factors for you to look at when you analyze a company. None of these factors will dominate or determine your investment process. And we hope that is the case as well, because we really encourage you to look at multiple factors at the same time so that you don't miss anything. But it's really coming back to what type of investors you are. Do you want to buy large companies that trade very liquidly so that you feel more comfortable holding on to them for a longer period of time? Or are you more of a risk taker and you want to buy some illiquid companies, small in sizes, but the potential for outsized return, if you get it right, can also be quite high? Those are the things you should always consider and balance. And hopefully this complete list of factors will help you understand a company better, finding you some winners and hopefully at the same time avoiding losers for you.